Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. T plus one, if I can call it that, or a B plus one, budget plus one. Yesterday was a Sunday, the union budget. And of course, we got you all the details, all the highlights through the course of the day. We're coming to you from the CNBC TV 18 Motoyoswal studios. I'm Prashant. With me, my colleagues Nigel and Rima. Guys, hi, morning.
Hi, good morning. And the question is, will the markets wake up to a massive budget hangover after yesterday's violent flush out?
Well, that's right. And, it's Monday, remember, guys?
Yeah, there's a whole full week ahead of us.
You woke up this morning and you wanted to prep for the show. Looking at the rates, you're wondering what's happening. There's no overnight action from the US markets or any of the global markets. They said, oh, man, we were working yesterday. So realigning ourselves and get set for a big week.
Yeah, that's what a working Sunday does to you, right? I mean, it sort of throws you off completely. But let's just take it from where we picked up from yesterday, right? I think that's essentially where we are at in that sense, right? And I want to start, of course, with just a couple of lines on the budget before I go any further, because I think it's still very much the focal point, very much the focus area. And typically, what happens many times is a day or 2 days later, people will start to move on, but also, I mean, what seemed like a shock as soon as it happened does not seem like a shock. I mean, there's, of course, human behavior at work as well. I mean, that STT hike, I think overshadowed everything else. It was a pretty pragmatic budget, focus on the long term, staying the course, did not let the fisc slip, etc., etc. But I think the one thing which markets were expecting, along with everything else, which is the pragmatism, given that it's a tough place that we find ourselves in. The budget is tight, not very much money, not very much leeway to spend in that sense. So all of that was fine, but I think what was expected was some help on the equity taxation front, perhaps at the margin. But what was absolutely not expected was it going in the reverse direction, which is the STT hike. And that's why I'm saying that pragmatism in the budget perhaps overshadowed, at least yesterday. But let's pick it up from there, right? Now, the numbers are all on your screen. FY27 budget spending growth and Capex has been a focal point. So defense 18%, railway 10%, power Capex up about 18%. And these are healthy, good, strong numbers in that sense. The one thing I picked up from conversations with many across the board, post-markets, etc. as well, is that the data center investment could be a big thing. It's a 21-year tax holiday. We'll talk more about this. I mean, in terms of what this can do, what this could mean for FDI, large amounts of FDI to come in. And remember, with something like this, 3 or 4 players globally control 70-80% of the data center market. So you're not talking to hundreds of companies. But these companies have the ability to pump in, $100-200 billion. So this is something which came out as a piece of, positive, something new, unambiguously, and also which, of course, addresses what's happening with the big AI boom globally. Now, STT on F&O, of course, the biggest surprise, by far, as I said, negative surprise. No offset from capital gains tax. However, the mood, I don't need to repeat that. And on the back of it, and remember, yesterday, FPIs were not there in the market. It was just us, right? But because FPIs were not there and there today, we'll see if there is some selling which starts to come through. If you look at the cash market numbers, the local investors also sold. I would imagine, that's, of course, also on the back of this disappointment, but also perhaps a little bit of anticipation of what FIs may do today, FPIs may do today. So that's where we kind of find ourselves at. Now, the other thing which was not there yesterday, along with the international markets and FPIs, was bond and rupee markets. So bond markets will open, rupee markets will open, and watch it at 9 o'clock. And I feel it's possible, bond deals perhaps inch up at open, 5, 6, 7 basis points, and perhaps the rupee could be under a little bit of pressure as well. So, again, something to watch out for. The worry here, especially on the bond market front, is the gross borrowing number, which is, of course, higher than what markets expected. So, I think 915 equity, but I think before that, both bond yields and equities should be in focus as well. Just a few other things. Auto sales numbers for the month of January are strong, and we'll get more details company-wise in a little bit from now. But this is good to see. Gold and silver prices, Manisha tells us, are, because remember, the last close, of course, was on Friday. International close was on Friday. We were trading here yesterday. And in Asia this morning, gold and silver prices are lower. But I don't think there is a big correction after yesterday's big sell-off in gold and silver prices, because if you look at parity prices in rupee terms, the market here closed lower than where international prices closed on Friday. So this morning, as we opened the ETFs and the trading on physical front, the MCX market, I don't think there is a big down leg, despite the fact that, in spite of the fact that gold and silver internationally is lower once again. Later in the week, I mean, there's the RBI decision, which will come through, and I think it's largely expected to be on hold. But I think it'll be interesting to see, especially because the RBI is expected to be a net buyer of bonds this year, and we'll have to watch their views on rupee, etc. So commentary, I guess, more important than the action where they expected to stand pat. I'll just tie in the levels here and wrap it up. So Nifty is back in the channel, big intraday swing, right? So we're back in the channel, and the downward sloping channel, we broke above it on the upside. And we are, by the way, we are now closer to the lower end. It's a big whiplash yesterday, and we are now closer to the lower end and then to the upper end. The channel support is 24,650. We left off at 24,825. Let's move on. Let's put the levels up, please. And 24,650 is the first support. If 24,650 breaks, which is the channel support, the August low comes into view, which is, I think, 24,337. Yeah, 24,337 is the next support, if you can put that up as well. And so these are on the downside levels to watch. On the upside, the resistance is 25,170. And I think that's where we find ourselves at. Remember, for financials, for the Nifty Bank, etc., I'm not putting out levels. It'll also depend in a large bit on the bond deals and how they open up, because it'll impact treasury gains and treasury. I mean, on the treasury front, it's going to be a big mover this quarter. So we'll sort of get to it as we go along. GIFT Nifty will come up on your screen as we open up. And we'll give you a quick sense of where we are starting. It's 10 points, so neither here nor there in terms of very, very measured kind of start. I guess still watching for what foreigners will do, because that we'll only find out by about 9:15 or so. And of course, before that, the bond and rupee market start. Positioning and how does it look? Nigel, over to you.
Well, one quick point. The Nifty ended down close on 2% yesterday, which was budget day. And this was as bad as what we saw in 2020 when the Nifty ended down 2.4%. But guess what? 1 week later, we were actually up 3.5% before COVID took over. And that's when we had that big sell-off out there. So that's the data point that I'm clutching onto, that maybe, in fact, yesterday we did position ourselves for a manic Monday, but may not happen. Let's see how that goes. Well, looking at the Nifty intraday chart, clearly, yesterday the domestic players were definitely bracing for a very, very bad Monday. So we'll see how that goes, because there was a lot of selling that we saw from the DIs itself. DIs sold close to on 700 crores. That's something that we haven't seen. And FIs were virtually absent in trade. But in the futures market, on index futures, there were short positions that were added close to 9,500 contracts, with their short positioning at around 88%. I was looking at the F&O data, and the clients on stock futures, they unwound some long positions. Close to around 45,000 long contracts is what they unwound. And that's something I haven't seen in a while. So there was some unwinding of longs that we saw from the domestic participants, coupled with selling in the cash market. How does the positioning look on index futures now? Well, clients, they are net long, 1.3 lakh contracts on the long side, while the FIs, they are moving towards extreme levels at around 2 lakh contracts on the short side. So that's one data point. When the FIs are so aggressively net short, and you have the markets that have already corrected, in a jiffy, we have corrected what, 26,200 to around 24,800. That's a sharp correction that we have seen. The other technical factor that I'm looking at is the way we have stretched in terms of the PCR data, because the PCR is at around 0.6 or thereabouts, which is the lower end, and normally this technical indicator indicates a bit of a bounce. So the PCR at the lower end, the FI is aggressively net short. The bulls will be hoping that both these two factors play in their advantage. The call writing, though, continues. 25,000 call aggressive writing is what we saw in yesterday's trading session. So let's give you the levels then. This market has turned into a sell and rise, and the structure itself has been broken. But I'll be looking at important support levels. And I think the 24,400, 24,500 level is very, very important. It coincides with yesterday's low, which was ballpark around 24,570. And even the low that we saw on 30th of September, when we made that low of around 24,588 or thereabouts. So holding on to that 24,500 is an important data point. Otherwise, we're bracing for a sharper correction. The Nifty Bank as well has pulled back considerably from around that 60,000 odd mark, which was just a couple of trading sessions ago. So the 100 DMA is now a reference point at around that 58,000 odd mark. And yesterday's low at around 57,780. You don't want that range to break on the downside. So we're positioned for a weak trading session. Let's see whether or not that happens. But my gut is we do see some kind of recovery from the lows, because yesterday it appears that we actually overextended ourselves on the short side just in the near term.
Okay, so the PCR is at oversold levels
And
of
the FI net
0.6.
shorts.
The auto sales numbers are good. And plus, crude prices have also, come off from levels of $70, $71. It's down to about 67, 68. But